Autos, focus on that. And Rajiv Bajaj, MD at Bajaj Auto, joins us on the phone line from Pune to discuss more about the company and the outlook going forward. Rajiv, hi, morning. Firstly, after the duty hike in Sri Lanka and petrol price deregulation in Nigeria, do you think the export market volumes can slow down, or do you think the hike in cost that you will undertake will be perfectly absorbed by the markets?
Well, let's take a macro view of things first. Even over the last financial year, there were several issues that threatened to disrupt different markets. You've mentioned the one in Nigeria, which was, I think, around January or so. Sometime before that, for example, there was the disruption in Egypt. And that's important for us because it's a very large market for our three-wheelers and more recently even for our motorcycles. Somewhere halfway through the last year, for several months we had this sort of DPB withdrawal hanging over us. So, I would say what has happened now in Sri Lanka is just one in a sequence of many such events. If we look at how the year has been for us particularly, despite all this, we've had a very good year as far as exports are concerned. Our exports grew by, I think, about 30% or so. We finished at more than 1.55 million vehicles. And so we have done well. Now, the specific answer to your question would be both yes and no. What I mean by that is that on the one hand, because Bajaj is still a relatively small player in overseas markets, such disruptions do not immediately dampen our sales momentum, because we can always grow by gaining market share.
Hi, Rajiv. Nikunj Dalmi also, joining in. Rajiv, last time when we interacted with you, you'd mentioned that exports will be the big game changer for Bajaj Auto. You have a strong presence in Sri Lanka, strong presence in Nigeria. Apart from these markets, which are the new markets you're planning to enter?
Let's put it like this. We are currently very well placed in the markets of South Asia, in most markets of Africa, and also in many of the significant markets of LATAM other than Brazil. Now, in these markets, we see that we still have a lot of headroom for growth, because in our best estimate, our motorcycle market share is only about 20%. So there's a lot of headroom for growth in these markets. So that's one half of the answer. The other half is that there are some significant markets, motorcycle markets of the world that we are not present in and that are relevant to us. Simply, these would be the ASEAN markets, barring Philippines, where we are already there, and if I'm not wrong, we may even be the motorcycle market leader there. But basically, we are not really present in the ASEAN markets, and we are not present in Brazil. So we have to find I would say, a strategic solution to entering these markets. And if we were to do so, then that would mean that we would then have access to new markets that together, I think, are as big as about 3 million motorcycles a year or so.
Rajiv, how soon can we see a conclusive plan for ASEAN markets as well as a Pulsar, or perhaps on the roads of Rio?
Well, I would like to just say sooner rather than later. It's something we are working on, and as soon as we have a story to tell, you will hear from us.
Rajiv, on raw material as percentage of total cost, most of the two-wheeler companies are experiencing margin pressures. Do you think, given the way how global commodity prices have corrected and global growth scare is back, raw material cost as percentage of total sales will come down?
Well, Well, let me again state what has actually happened. Till the third quarter of the last financial year, raw material prices kept rising, although progressively they were not rising as acutely as they had been before. In the fourth quarter, it's been kind of flat. So there's not been further escalation, but there hasn't really been a softening either. Now some commodities have softened a little bit, but there are others that continue to rise, plus whatever be one's import requirements, those have become more expensive because of the way the rupee and dollar equation has changed. So on the whole, in the fourth quarter, after a long time, we have witnessed a situation where there has been neither an increase nor a decrease. It's been flat. So our assumption is that for the near future, which would be the next couple of quarters or so, it should hold itself at that level. But I do not see as of now any clear signs of any significant softening in overall commodity prices.
Rajiv, let's shift back to the domestic market. How do you see the three-wheeler volumes panning out in the next 2 quarters, considering they've been a little weak?
Three-wheelers over the last 12 months have actually registered a negative growth as an industry. The reasons could be many. One can say the general state of the economy, interest rates, fuel prices, blah, blah, blah. All these are factors. We have been fortunate in that we have managed to grow our market share. I think there are many reasons for this, but if I have to put it down to one reason, I would say that we focused very sharply again on what our three-wheelers stood for. We are the dominant player as far as the quote-unquote smaller, relatively more fuel-efficient three-wheelers are concerned, which are used primarily for intra-city transport, as opposed to some of our competitors who make the bigger vehicles that are used more as outside the city or intercity transport. Right. So we focused very sharply on our area of competence. That has helped us, to gain share. However, volumes really have been flat. Since the last 12 months have been like that, I think it would be logical to assume that the next 1 or 2 quarters would not be remarkably different. However, halfway through the year, I can tell you this, we are going to be in the marketplace with a completely new range of three-wheelers.
Rajiv, most of the analysts have been concerned about your 150cc plus premium bike sales. In fact, your nearest competitor, Honda, has overtaken you in terms of volumes in the month of March. Are you planning to launch or market 100cc bikes more aggressively, which will help you regain your lost market share?
In the domestic market, if we start from two-wheelers, fundamentally over 70% of the market is still motorcycle. Let me make that point. So it really doesn't matter, beyond the point by how much the mopeds or the scooters grow, because over 70% is still bikes, and I think that is for a very good reason, for all the kind of benefits that motorcycles offer. So I don't think that's going to change in a hurry. That has registered double-digit growth over the last year. However, quarter on quarter there has been a slowdown, and the last quarter has barely seen some growth, like 5-7% kind of growth. So once again, I would say the signs are not good in terms of sales, and of course we hope that will change. In the meantime, all we can do as a manufacturer is once again, stir the market with new products, and I think for that reason, if for no other, it's going to be a big year for Bajaj. In fact, I would say this year for our motorcycles in the domestic market should be the biggest year in recent times, because we started in February with the all-new KTM, which has been very well received. Last month, in its first month of sales, we have sold over 1,300 vehicles, which is quite something for a premium brand. We start later this month with the new Pulsar, which seems to have been acknowledged by various auto journalists, and I'm hopeful that It will bring in very good sales as it reaches showrooms early next month.